Stocks pull back ahead of the US Federal Reserve's interest rate decision on Wednesday. Realty ekes out some gains, but power, energy and financials drag. Mid-caps still fare better.
Vedanta declares a fourth interim dividend of 8.5 rupees per share, amounting to around 3,300 crores, of which near 1,900 crore will accrue to the promoters itself. The latest payout will take the total dividend for this financial year to nearly 43.5 rupees.
Bank and Pharma looks to raise nearly 3,000 crore rupees through its QIP, while Gravita eyes another 1,000 crore. HCC also joins the QIP queue with a 400 crore rupee offer. Meanwhile, the Abu Dhabi Investment Authority is likely to have sold over 9% stake in Mindspace REIT to raise over 1,900 crore rupees.
India's trade deficit hits a record $38 billion in November, propelled by a sharp jump in gold imports to about $15 billion from just about $3.5 billion a year ago. The rupee slips further on the queue. After a couple of days of big gains, we're now bracing ourselves for some losses as well. The Nifty is now firmly below that 24,400 mark, down 300 points. A 1,000-point decline on the Sensex, with the Bank Nifty declining about 750 odd points. The mid-caps are outperforming by not falling as much. That index is down just about 100 points. This is Halftime Report. I'm Manglam Malu. With me is Hormaz Fatakia. Hormaz, on Friday the 13th, the big up move that we saw on the market, all of that has been, more or less given up. We're just about 150 points away from Friday's low. We tested the upper end over the last few trading sessions. Seems like we're now testing the lower end.
Well, you never say over until it's over, right?
Yeah.
We still have an entire half of a session to complete. But yes, we're at the lowest point of the day is the Nifty, and almost as Manglam was highlighting, right, giving up almost everything that we gained during that extremes session of extremes on Friday. Almost now just 200 points away. 24,190 was last Friday's low. We are at 24,380 as we speak, 280 points down on the index. What's pulling the index down, though, are the heavyweight banking names. ICICI Bank, HDFC Bank, Bharti Airtel is a contributor to the downside, along with stocks like TCS and L&T. So no respite coming in from the index heavyweights. And of course, the mid-caps were faring better, but they are only faring better in terms of not falling as much and not being in the green. But there are some movers that we have in today's trading session, and Cipla is one such stock, and that is after brokerage firm Kotak upgraded the stock to a buy from an earlier rating of add, and it's citing a slew of decent launches that are lined up in the US markets. Vinny is joining in to tell us more on that. Vinny.
Yes, so what we are seeing coming in for Cipla, that Kotak has upgraded the stock to a buy from a previous ad rating. They have a target price that they've given a slight bit of a reduction, 25 rupees reduction in the new target price. 1,725 is the new price that we're watching out for. Now, what Cipla is highlighting that, yes, there is some bit of a delay in the generic drug, which is Exabrin, which they're launching. That launch is now shifted and moved towards mid-FY 2026. So despite this delay, what Kotak is saying, they expect Cipla to do well. They believe that this drug will still give them a very good opportunity, though it is now will be coming in from the second half of FY 26, but still a good opportunity. Other than that, in terms of a lot of launches that they're planned in the next couple of years in US will be a big positive for them. Gradual recovery in domestic markets, as well as a change in the mix and shift towards chronic mix will be something that will work out for the company. Improved productivity is what they'll be watching out for. Though, as of now, Kotak has reduced the EPS target for FY25 to FY27 by 1 to 3% for Cipla, but they believe that right now the valuation has already priced in all these concerns that we've been talking about. So good move is what they're expecting from the stock going forward.
All right, Vinny, thanks a lot for that. A good move. Just keep an eye out on ITC. That stock has moved off the lows of today's trading session, has moved virtually towards the higher end of today's trading range. And the reason for that is just about 20 minutes ago, we did get an update on the exchanges where the NCLT of Kolkata has gone ahead and approved the scheme of arrangement with regards to their hotel demerger. And as a result of which, the company has gone ahead and filed it with the exchanges, etc. as well. Now, the only thing that remains for the demerger to go through are the stock exchange approvals, and thereafter there would be a record date and an effective date. The appointed and effective date of the scheme shall be the first day of the following month in which the NCLT approval is received, and that would be Jan 1st itself. So we'll keep an eye out on this because this was an important trigger to track. Remember, the stock when the demerger was first announced was close to around 499 or 505 odd rupees. Since then, a lot has taken place on the positive side in the hotel business itself, the hotel industry. So we'll keep an eye out on how this pans out. That's about ITC, the stock off the lows of trade, and at the same time has contributed a little bit to the Nifty by virtue of its weight that there is, and the Nifty is around the 24,400 mark. The stock that is zooming in trade today after brokerage firm Antique has initiated coverage is Quest Corp, up around 9.2% in an otherwise wobbly market. Rima joins in to tell us about what Quest Corp is saying. Rima.
Thanks so much for that. So first, what is Quest Corp? Well, Quest Corp is India's largest staffing company and 46th largest global staffing company by way of revenues. So they provide staffing, which basically means that you're a manufacturing plant, you're an office, you require some hands, then Quest Corp will help you do the job just like team leads. But outside of that, they also provide facilities management. For example, that you have a big factory or a hotel or a hospital and you need cleaning service, you need security services. So they provide that, and they also provide some sort of IT services. Now, Antique says the company is a beneficiary of strong hiring. We're seeing strong hiring because of increasing formalization, the rise of gig economy, the capex push because of PLI scheme, manufacturing on account of China Plus One, and the growth of global captive centers. Now, according to Antique, Quest is likely to see a top-line growth between 12 to 14% from FY24 to FY27. Their target price is 1,000 rupees on Quest Corp. From here, it's close to about a 40% upside. They value Quest Corp at 25 times forward multiple, FY27 multiple, which is at a discount to Team Lease. The reason why they're putting a Quest at a discount to Team Lease is because Team Lease is expected to offer higher growth rates. So, as we said, for Quest Corp, Antique expects about 12-13% top-line growth, but for Team Lease, they're anticipating about an 18-20% top-line growth. Even in terms of the EPS growth or the jump, for Team Lease, where Antique expects the EPS to more than double in a span of about 3 years. So they're bullish in the staffing space. As I said, on Quest, it's a target price of 1,000. On Team Lease, their target price is 4,100 rupees. Back to you.
The first price target of 1,000 rupees on Quest Corp showing up on the price as well. Rima, thanks a lot for that. 9.5% higher on Quest Corp at 730, 1,000 rupee price target coming in for the stock. But before we go into a short break, it's time to introduce Growth Code, a special initiative by Grow and CNBC-TV18 to further empower retail investors and traders. Renowned investors and professional traders convened at Grow's Trading Right event on the 9th of November, where they shared valuable insights. Here's a snippet of what pro trader Subhashish Pani, the CEO of Power of Stocks, had to say about when not to trade in F&O. Listen in.
ट्रेडिंग क्यों करते हैं लोग आपको पता है? एक्सपेक्टेशन, ग्रीड, क्योंकि भाई इन्वेस्ट करूंगा तो 10 साल बैठना पड़ेगा, 5 साल बैठना पड़ेगा, डबल भी हो गया तो मेरे पास 50,000 है, उसका डबल भी कर लिया तो क्या करूंगा? चांसेस है 50,000 का 5 लाख बना लूं, 10 लाख बना लूं, और ये रोड मैप में ना कभी वो चल पाते हैं ना कभी वो स्टार्ट ही कर पाते हैं। इन द सेंस ना इन्वेस्टर बनते हैं ना ट्रेडर बनते हैं, दोनों जगह पैसा लॉस। बोरोड कैपिटल में कभी आपका सर्वाइव नहीं होगा। लेवरेज बोरोड कैपिटल कब यूज होता है? बिजनेस को एक्सपैंड करने के लिए। और आप क्या करने के लिए आए हो कि नहीं भाई 15 लाख से अगर स्टार्ट करूंगा, दिन का 10% तो दिख ही रहा है, 1-2 महीने के अंदर अगर डबल हो गया, 10 लाख हो गया, लोन क्लियर हो गया, उसके बाद फिर गाड़ी घर ये चलता रहता है। और ये नर्व्स को ना इन्फ्लुएंसर बहुत अच्छे से पकड़ते हैं और बोला जाता है कि नहीं, हाँ अरे भाई डेली आपको पैसा बन सकता है।
Welcome back. It's almost been about 3 years since these new age companies listed on the bourses. Delivery 2 listed sometime around in May 2022, and it's been in focus after this recent bit of underperformance today. Equirus has initiated coverage on the stock. Mangalam, what's clicking?
What's clicking is the fact that the stock has been underperforming for a very long time, and now there are signs of some sort of business improvement out here. Delivery, remember, a couple of years ago when the IPO or the issue came out, it was around 487 rupees odd. From there, it was a one-way slide down after a big up move thereafter. So, after this underperformance, maybe the street believes that it is a position where one can perhaps initiate long calls on delivery with a target of 459 rupees, which, mind you, is still slightly lower than the issue price of 487 itself. Apart from, just these two numbers, the important part is that they expect the revenues to compound in mid-teens over the next few years, with margins at around that 8.6% mark, led by operating leverage and improving performance coming in the part truckload business of their B2B vertical. Valuations for delivery are justified as per Equirus on account of two factors. One, the improved profitability over the next few years. Alongside that, them gaining market share from the established B2B players itself. So when they value the company in the near term, it is at around 57 times 1 year forward earnings. But the pace of growth is such that, 2 years down the line, that valuation number changed, multiple EV EBITDA multiple changes to around 22 times. And on that, it looks a lot attractive, and which is why the long call. While we were talking about, delivery, an important news at the bottom of your screen, non-market but important from a policy standpoint, with the One Nation, One Poll bill has been tabled in the Lok Sabha itself. So we'll keep an eye out on that one, Harmas.
Interesting, right? And so we keep an eye out on the parliament proceedings as well as to what comes out from there. But the other stock that has been moving around in today's session has been Pharma. Remember, we have had like 4 stocks that have had initiating coverage calls in today's trading session, and Pharma is one of them. And JM Financial initiated coverage on the stock. It's a buy rating, a price target of 340 rupees, and also an upside of around 35% from yesterday's closing levels. And Pharma, mind you, has had a good year so far. It's almost 80% on a year-to-date basis as of yesterday's closing. So add another 35% is what JM Financial is anticipating. Now, what they say is that they're building a 23% plus EBITDA CAGR for Pharma going forward, and that will result in steady cash generation. And they talk about their CDMO business as well, which is one of their key revenue generating metric. And they say that this business is key to its outperformance going forward. Now, on a valuation standpoint, what they say is that it's currently trading at around 21 times FY26 EV to EBITDA. And on an FY27 basis, it's trading at around 17 times EV to EBITDA, which is a significant discount to its average listed peers, a 38% discount to its average listed peers. So that also is what's driving JM Financial's bullishness on Pharma. Now, what they say is that the traction gained through the newly commercialized molecules and, of course, a potential recovery that is anticipated in the US biotech sector in the second half of this year is what will also ensure that this CDMO business achieves this 17% CAGR over the next 3 years for Pharma. So, a bullish call coming in. JM Financial buy rating 340 rupee price target, and interestingly, all 10 analysts who track Pharma have a buy recommendation on the stock.
All right, let's do that. And as we slip into a short break, let's get you some good news for our viewers. India's business news leader is now just a click away. CNBC-TV18's all-new app gets you instant access to breaking news, in-depth articles, financial world updates at your fingertips. You can download the CNBC-TV18 app from either the Apple Store or the Google Play Store, and this is what you get to see. This is the user interface of the app, and all the in-depth analysis, breaking news right at your fingertips. Stay
Late, isn't it?
As we speak, 1,000 points down on the Sensex, 300 points down on the Nifty. That little bit of a smidge above that 24,400 mark has been sold into once again. So we'll keep an eye out on that one, because perfect time to look at, the F&O report at midday. The Nifty Bank and the mid-cap index, all of them lower. The mid-cap index a lot less lower than the others. So we'll keep an eye out on that one. Volatility. Yesterday itself, we were talking about, how the VIX had spiked 10% and followed it up with another 6% spike, moving closer to that 15 mark itself. What's interesting is that the Nifty, yesterday was above that 100-day moving average. Today has fallen below the 50-day moving average. The next level to watch out for will be the 20-day moving average, which has moved higher between Friday and now itself from 24,150 to 24,270 itself. So that makes it an important support zone to keep an eye out on for the frontline index. In that itself, a lot of these new age players are doing a lot better. We spoke about delivery earlier. Paytm is up around 1%. Zomato is doing well. Nykaa itself is marginally in the green itself. On the way up, though, a call writer, the call writer activity has been fairly high. 24,500 call writers telling you that around 24,500, 24,600, there would be some sort of resistance. Supply coming in, 24,450 call writers too, very active. On the obverse side, though, there haven't been enough put writers. So that's something we'll keep an eye out on, because, the put call ratio has now moved towards 0.73. Typically, the market tends to show a bit of a relief rally once the put call ratio hits that 0.65 to 0.7 mark. So it's at the lower end of the range. We'll keep an eye out on this very closely, largely because if there has to be a bounce, it has to be from these levels itself. A lot of long positions added in the real estate space. Macro tech developers stands out on that. A lot of shorts in the financial space. Sriram Finance and L&T Finance both seeing some fresh short positions. PVR this morning came out of F&O ban, may re-enter F&O ban, and also a contender for F&O ban today would be Bandhan Bank. So we'll watch out for all of those. But the short point is that if the market has to bounce back, it has to bounce back from these levels itself, because there aren't a lot of put writers and the put call ratio has moved towards the lower end of the range.
We'll ask that question to Nagaraj Shetty of HDFC Securities. Nagaraj, good afternoon. Thank you for joining in. Does the Nifty have enough legs to bounce from these levels? And does this still remain a buy on dips opportunity, considering we are very, very close to some very important levels now? What's your call on the index and your stock recommendations for the afternoon as well?
Hi, good afternoon. Nifty has been showing high volatility in the last few sessions. Few days back, we have seen some significant upside recovery from the lows of around 24,200 to almost 24,800 level, 600 points rally in a session from the lows to high. After that, market failed to sustain the resistance of around 24,800 levels and reacted sharply on the downside so far today. So I'm expecting this broader range is likely to be there for the near term. And at the lower levels, 24,200 is going to be a support again. I'm expecting upside bounce to emerge from the lower levels. And at the higher levels, 24,800 is going to be a strong resistance over the period of time. During this range, broader markets are doing very well. A small decline, the mid-cap and small-cap indices have moved up very well recently after forming a hammer kind of a pattern, which is positive indications as per the technicals. I'm expecting this broader market indices are likely to outperform the Nifty, at least for the short to near term. On that basis, I have two picks, one from a short side, one from a long side. And in short side, in the long side, I have one stock from the realty front, that is a DB Realty. That's the other name of the stock is Valor Estate Limited. If you look at chartically, the DB Realty has been in a gradual downtrend recently. It has witnessed a sharp upside bounce in the last couple of sessions. Overall chart pattern is looking positive, indicating that important bottom reversal happened at the lower levels, and the current stock is currently placed to move above the important resistance of 200 EMA. Overall chart pattern is looking positive. One can look to buy currently around 185, 185.25. The target would be around 195.96, and one can place a stop loss at 178. So another one is from a short side, from the banking side. I have RBL Bank. RBL Bank has been a downtrend over the last many months. We can observe the lower tops and bottoms on the charts, and recently after the bounce back, it is forming some distribution kind of a pattern. When we can say that bearish head and shoulder type pattern on a smaller time frame, currently placed around 169. One can look to sell around this level. Target would be around 160, and one can place a stop loss at 175.
All right, we take that point, Nagaraj. Thank you so much for joining in and giving us your views on individual stocks. On the other side, we'll, take a short break, come back. We have Bala Sarda, who's the founder and CEO of Vadham India. We discuss, tea prices, consumption trends, and a lot more. Basically, just get a lot of tea out of him. Speak about this space just ahead of the time when a lot of people would be indulging in spirits as the year ends. Stay with us for this conversation. Welcome back. Just keep an eye out on the rupee. As we speak, we have, the rupee has moved to the low point of trade, perilously close to that 85 mark as well. 84.92 is where we are on the currency as against the dollar. Weakening was expected because of the trade deficit data that came by for November. But, we'll just monitor this because this has an inverse relation on some of these IT stocks. The Nifty is back above the 24,400 mark once again. And pull up the Nifty IT index, you'd see a smidge of a recovery from the lows on the IT index as well. So there you have it. Nifty is recovered from the lows, led, off lows by the IT stocks. So if you pull up maybe some of the intraday charts of Wipro, Wipro is the only Big 4 from the Nifty in the green right now, but has seen a recovery of about 0.75% from the lows. HCL Tech also has seen a recovery, and we have Infosys up around 0.8% from the lows. Mind you, still in the red. The Nifty is still down 230 points, but a wee bit of support coming in from the IT pack on account of the weakness that we're seeing in the rupee itself. Speaking about support, the one thing that we all need for support to run through our day, and most importantly through December, is tea. Bala Sarda, who's the founder and CEO of Vadam India, now joins in. You all know Vadam as, one of the brand's domestic homegrown tea brands. Bala, we've been speaking to a lot of the listed companies. They reported their second quarter numbers as well. All of them, while they spoke about weakness in consumer sentiment, they called out in specific the weakness in tea, largely because they're losing market share to unorganized players, loose tea, because of higher tea prices. Is that largely because of, the higher tea prices? Or maybe there are players like you and others who are making inroads and taking away market share from the larger players?
Right. So, Mangalam, firstly, thanks for having me. I think on your question about, what are the reasons impacting some of the prices of these listed companies? Firstly, I think about Vadam India, just to remind you that, we are primarily a global play, which basically means 97% of our business comes from export markets, primarily the US, Canada, Europe. So it's clear that it's not us and primarily the rising tea prices. If you see, we have seen almost a 20% increase in prices, especially in the summer harvest, year on year, for some of the products these companies procure. Three key reasons. One, of course, the extreme weather conditions. I think the crop in West Bengal and Assam, which is almost 90% of India's key harvest or key production volume, was massively impacted because of heat waves, then a lot of flooding. Secondly, there has been an oversupply from regions like Sri Lanka and Kenya, which has been further impacting prices from an export perspective. And I think one more thing I want to add is the government has also banned 20 pesticides in tea harvest, which has also led to a decline in tea efficiency yields, right, at a farmer level, right? So I think these are three reasons which has led the price to go up. And because some of these players play in the domestic CTC market, where margins tend to be much lower and way more sensitive to any increase or decrease, I think this has led to obviously them increasing prices. A lot of them plan to do it this quarter, if not done already, which of course poses a risk on consumption. But I think the more premium end of the market, which is herbals, green tea is something which we cater to even globally. I think that's because of our higher margins, right? And value addition. I think that's been obviously impacted significantly lesser. And we don't see any change from a consumer perspective on that front.
And that's a point that was made by Unilever as well, where they said that, green and functional tea continue to deliver strong volume growth itself. In a higher tea price environment, how does consumption get impacted? I mean, do you see, it's the classic college case, right? If tea prices increases, maybe the demand for coffee increases. Is there substitution? How do consumers behave?
I think overall, Mangalam, the consumption of tea primarily in India is obviously very, very specific to that category. So we don't see too much movement into other categories. But definitely, there are two things which happen. Consumers either downtrade, right? And as you know, right, in the CTC market, there are a lot of regional players, right, who are leading, across states in India. So while we have these bigger Tatas and the Unilevers leading charge, but there are a lot of these regional players. So a lot of people do tend to downtrade, and overall maybe consumption frequency tends to sort of go down. And mind you that sensitivity is lesser in the winter season. It only goes up, with prices outside of the winter season. But that's how I would put it from a consumption standpoint.
Bala, this one is from me then, and you pointed on a couple of things really. One was, of course, about the harsh weather. The second is that we understand that the whole season this time is looking at an early closure as well. In the month of November itself is when we saw those names coming in. While the Indian markets are looking at slightly lower in sense of consumption, even plateauing for that sense, how have exports been for you? I want to understand, one, on the prices part of it, because we've seen the prices gain quite immensely. Has that been shifted into your export numbers? And we've seen various other export in sense of merchandise do kind of okay when it comes to US and Canada. Have those numbers improved for you? What really has been a quarter-over-quarter or an year-on-year growth for your sense in sense of exports?
So Manisha, I think from our perspective, I think some of these specific points I talked about has not impacted us in any way, if I could put it like that. I'll tell you 2-3 reasons. One, if you look at the average tea price per kilogram in India tends to be somewhere below $3, right? And a Vadam India, where we do a lot of value add, cut out all these middlemen who eat some part of the share, going up to a consumer in all these global markets. We cut out all of that as a brand. So our sensitivity to that is much lesser because our average selling price tends to be north of $75 a kilogram, right? So that 10 to 15% or even a 20% change does not really impact us. Number two, I think as a company, we also are driven by innovation. So a lot of our blends is not only tea, but a blend of teas with Indian superfoods like spices, herbs, which of course have a very, very different value chain. So that also reduces the impact even further. For us, overall, I think the good thing has been that after 2 years of some of these global markets seeing a consumption slowdown, primarily due to a factoring in of the balancing act out of what we saw post-COVID. And secondly, the NASDAQ was at an all-time low. So overall sentiment was lower. But I think now things are looking much more positive. I think we believe with Trump coming in, US, Canada, overall, we are already seeing a much better sentiment with consumers. And we saw that in Black Friday and Cyber Monday, which is a good proxy to tell you what's really happening in the market. And that's really what we have seen work well with Vadam as well. We are back to strong double-digit growth. We're going to finish the year with EBITDA and net profitability. And sort of, and while, of course, a lot of that is also because of our distribution expansion in offline retail in some of these markets, I think the overall sentiment becoming better is definitely going to help us now over the next 18 to 24 months.
Sure. Well, I have a quick final last question. So we understand that you, while of course exports is a big market for you and you have a lot of celebrities as your consumers as well. What is the, special tea that you've launched this year, or what are the plans now for 2025 in sense of specialty teas?
Right. So I think, Manisha, like I said, we try to do a lot of innovation in the way we present our products. So, India is this amazing land making some of the world's finest turmeric, moringa, ashwagandha, all these superfoods, which now the West is embracing. We've been consuming them for thousands of years. So I think Vadam tends to do a lot of innovation and bringing them in formats which consumers can enjoy them in a much, much easier way. So we, for example, had 2 best-selling ashwagandha blends in tea formats, which we launched in the US and Canada market, which has been doing very, very well. And in the next 12 months, we again have a lot of innovation coming in. So blending teas with Indian superfoods is something, we believe there's a big opportunity in. And, Vadam has been sort of trying to lead that for a while now.
The IPO, does that come in 25 or 26?
I was waiting for Mangalam to ask that question. But, no, I think, Mangalam, honestly, like I told you last time, I think it's been very interesting to see some of our fellow founders have IPO'd. And, we've been obviously closely observing, what the market is looking for from young companies like us. So as of today, absolutely no plans and timeline. I think we need to work on our scale. We need to work on a stronger story. We also need to work on a more stable EBITDA profile as a business. And I think then absolutely, listing is one of the options we would definitely look at.
All right, the next time we get you, we'll also ask you about your annual revenue run rate and profitability, etc. We'll pin you down on the numbers a bit more, but thank you for joining in. Wish you, your family, a very happy new year and season's greetings as well. Good luck with all the new launches that you're doing all of next year too. With that, take a short break, come back. The Nifty holding around that 24,400 mark. The mid-caps falling a lot lesser. We focus on markets and a lot of individual stocks. Stay with us.
Welcome back. Still a percent down on the index now. The 24,400 mark, very, very important for the Nifty, is where it needs to hold on to. The Sensex 2 down almost 900 points, a slight recovery from the lows of the day. But let's look at some of the stocks in the broader markets that are bucking the trend in today's trading session. DOMS Industries is one of them. It's trading with gains of almost 5% as we speak. Fertilizers as a theme has been doing well. So RCF, National Fertilizers, all of them are seeing gains of anywhere between 4 to 5% in today's session. And also pull up Masgao Dock, because that is the stock that is trading with gains of around 4.5% in an otherwise weak market. Mind you, in just a few days from now, the stock is going to trade X stock split. So the stock now 4.5% higher at the highest point of the day, 52.50 on Masgao Dock. Time for a break. On the other side, Manisha Gupta joins in with Kishore Narne, the Director and Head of Commodities at Motilal Oswal Financial Services. Stay tuned. Back on the other side.
Welcome back, and joining us on the show now is Kishore Narne from Motilal Oswal. Kishore, hi, good to have you. And what a year 2024 has been. And I want to start with gold and silver first, because we saw all-time highs for both of these in this year. While there is some bit of a correction as we head towards the end of year, but are these good buying opportunities? Are you looking at higher highs in 2025?
Good morning, Manisha. I think as far as gold and silver is concerned, we still believe there is a bit of steam left in gold. I think, see, globally, inflation has been a little bit sticky. It's not coming down as fast as people would like it to. So that actually made a little bit of deterrence on the rate cut cycle, and that actually led to some year-end corrections and also a little bit of profit taking as well, as you already said that about the returns. So in our opinion, I think gold will continue to raise in 2025, but probably the upside would be capped around 10 to 12% from here, which will take us to close to around 2850, 2900. In a best case scenario, maybe 3000, slightly above that. So in Indian context, probably 80 to 83,000 could be a base case scenario. Probably 85 to 89,000 could be a best case scenario. But I think here base case is more plausible. As far as silver is concerned, I think we continue to stick to our long-term bullish view. We continue to hold our targets at around $40 on silver, which makes, in Indian context, the base case scenario could be around 1,11,000 to 1,15,000 kind of as a base case. The best case scenario could be around 1,25,000 rupees per kilogram of silver, given the context that rupee remains at the current levels. If rupee depreciates a little bit more, probably then you can expect a slightly higher levels than the levels which I mentioned.
Sure. Kishore, what is your sense also on the metals as a sector? Because while we've seen 15% of gains come in for zinc, which, by the way, is the best performer now in the metal as a space, ferrous metals have all continued to decline, double digit of decline there. In the metals, even as we call Dr. Copper, we've seen 7% of gains on that. Aluminum is up 7.5% in this year. But zinc outperformance, does it come as a surprise? And do you see it continuing in next year?
Not really. I think it's not a surprise. We've been anticipating a rally in zinc, and we continue to be bullish on zinc, and zinc will continue to be outperformer for 2025 as well. So even from current levels, zinc looks at value buy rather than a good entry level at this point of time. If you're looking at a first quarter ending, probably you're looking at 290, 285 kind of levels. But I think at the end, I think mid 2025, end 2025, that could be around 320, 340 odd levels. So extremely bullish on zinc. Probably some positivity can come in aluminum because as again, you might have read the news that Europe is considering a little more sanctions on Russian aluminum and all other metals also. So the aluminum can have a short-term impact on that. But I think the Chinese economy recovery is going to be the major factor here. Probably towards the end of first quarter 2025, they would find some ground, and probably the stimulus will start to kick in the benefits of that. And also, at least the clear intent that they want to turn around the economy is very clear from the Chinese policymakers. I think that itself is going to help metals to find some base from here, and where they will consolidate from here onwards.
Very quickly then, Kishore, if there was a couple of things to watch out for in 2025 in sense of uncertainties that could be a game changer, what would that be?
See, US politics is something which is going to be very, very dynamic as Trump take over. That actually causes significant policy uncertainty at many levels. Second, we all know that the new government will be very positive and very supportive for cryptos. Probably a lot of geopolitical changes can happen. And also how the rate cut cycle will progress from here with the new chairman taking over, how he will set the tone for 2025. I think these are the factors which could be. And a big factor is Chinese turnaround. I think unless we see that, the commodities as a whole the demand cycle still will be a problem, especially in crude, etc., where the demand is still not very supportive.
All right, Kishore, thank you so much for sparing time and joining us today on the show. Manisha, thank you for joining in as well. That is a wrap on this edition of Halftime Report. We leave you with the Nifty still fighting to hold that mark of 24,400. Business Lunch takes the action forward.